Hello, welcome to McBoss Capital. My name is Michael Chu. This is the US stock market recap video for the week ending August 7, 2026. Here we see Nasdaq Composite Index bouncing back very strongly this week, almost above 5% here. Not only that, we climbed back above the red line, which is the 10-week moving average, very decisively. So that kind of put the market back into resume uptrend. And IBD signal is also now allocated at 60 to 80%. So that is quite a significant jump from last week, which was 0 to 20%. So a very positive week for the market in general. And here we have Nasdaq Composite climbing quite a bit, even though it didn't make new high, but it's still a very positive development. And perhaps this could be a beginning of a new rally. Possible. We also have follow through day. So on the chart here, we see 4 days climbing up, and then we see 2 days pulling back, and then we see Friday closing strong, up 1.3%. And the follow through day happened on Tuesday right here, climbing 2.59%. The volume is lower here on Nasdaq Composite, so it doesn't qualify as a follow through day. But on S&P, we'll see in a second here, it does qualify there. Here's S&P 500 index here on the weekly chart. You can see we bounced back from last week, and not only that, it clearly went to new highs on a pretty strong move here for the week, up 3.5%. On the daily chart, you can see on Tuesday was the day we break out to new high, gap up in the morning and continue higher, closing very strong, above average volume, above the previous day's volume. That constitute as a follow through day. And then Wednesday, Thursday, we pull back pretty slightly here. As you see, we are way above the green line. And then today, we're able to close strong once again. So very healthy signs of the market right now. Well, last weekend, we talked about how the market was setting up potentially for a follow through day. And obviously, last time we look at this was right down here, right? And then it just jumped Monday, Tuesday, and that all of a sudden we had a new follow through rally. So very quickly market can turn. Here's Dow Jones on the weekly chart. We were pulling back, and then last week start to bounce. We was above the red line, which is one of the strongest index because of that. And then this week we make new high as well, up 2.9%. On the daily chart, we see the similar pattern. Monday, Tuesday, we climb pretty strong, break out to new high, and then Wednesday, we make another high. Thursday, we start to pull back, and Friday, we bounce slightly, 0.2%. Here's Russell 2000 on the weekly chart. We also bounced back very strongly this week, up 3.5% after pulling back to the red line here, and we bounce off that. On the daily chart on Russell, we can see it is also climbed on Monday and Tuesday, almost making a new high, but it didn't make a new closing high, so that's good. And then pull back Wednesday, Thursday, Friday, it was able to close at the top range. So it didn't make a new closing high, but very close to it. Here's the CapForce IBD 50 ETF here. Unfortunately, this ETF didn't do that well this week. It was actually down for the week, and you can see it climbed up, but then it came back down. And probably some of the previous chip leaders, memory leaders were on this list, and they're still getting hit. So that's just the problem. Here we can see Monday, Tuesday jump really sharp, but it started to reverse very quickly. Wednesday, Thursday, and Friday here. And here we are almost down to new lows once again. So this is not good news for at least the current IBD 50 growth stocks. Here's a CBOE 10-year Treasury note index here. We climbed pretty high last week, above 4.7%, but this week we fall back. But however, by Friday we bounce back here and close at 4.66%. Here's US dollar index falling this week as well. It is now below the red line, so that is pretty big move down. And it tries to recover on Thursday, but it couldn't because Friday gapped down and make a new low. So US dollar might be heading lower based on this recent action. The US oil price also dipped this week. As you see here on Wednesday, make a new recent low. It did bounce back slightly. For the WTI, it closed at $77 US per barrel. This week, the gold make a pretty big move here as well. On Wednesday, you see the huge gap up and above the red line here, which is the 50-day moving average, and then from there it continued to hold on Thursday and Friday. We see another gap up here making new recent high, very big moves in a few days here. Here's Silver Trust also making big move on Wednesday and on Friday here, also bouncing above the red line as well. So very positive development there. Copper also bouncing strong all the way to Wednesday. Thursday it started to hold a little bit, but Friday it did drop back down to the 10-day moving average. This one is not too far from breaking out, so it could try again. Bitcoin was trading pretty tight this whole week. Didn't really make that big of a move, at least based on this chart. So that is the only problem here. It didn't really bounce like a lot of things did this week. So, but it is trading tight, and it's starting to look like it's trying to come back above the red line. But again, it's so little that it really is not powerful enough yet. During the open on Friday, we had the news for the U.S. economy, for the job market. It did unexpectedly lost 23,000 jobs in July, which was much lower than the 88,000 that was supposed to rise in employment. But the market did not react negatively because they think that now there won't be an interest rate hike in September. The unemployment rate also fell to 4.1% surprisingly instead of going up despite this job loss. But that's probably related to the labor force participation rate going down as well. This is the New York Stock Exchange advanced decline daily line down here, and then this is the S&P 500. Right now, you can see S&P 500 is near the highs, and then when we look at the advanced decline line here, we are also near the highs, so that is positive. Again, the reason to look at advanced decline line is to see the number of stocks up versus number of stocks down, which kind of gives you like the breadth of the how many stocks are doing good, regardless of weighting. And on the Nasdaq Composite, we are, recently we make high here, and this, we're also trying to come back here as well. A little bit weaker, but I mean, maybe it could catch up. We'll see if Nasdaq could catch up. Next week, on Wednesday, we have the Consumer Price Index data coming out for July. On Friday, we have the University of Michigan Consumer Sentiment Index for August. As far as earnings go, we still have a lot coming out, and this one's AI stock, CoreWeave, Supermicro, and Nebius. Here's Wenex Semiconductor ETF. This one also bouncing back this week, up 7.8% for the week, which is a strong bounce. However, we're still below the red line, so that's the first week of bounce. So next week will be more tests, whether we can fly through that resistance level. On the daily chart, you can see it better. Like I said, for the week, it's pretty good, right? Like they climb back above the 10-day. It tested 10-day on Thursday. Friday, it bounced back up close near the high. So this is all positive, but we are coming back to the red line, which is going to be a big resistance level. If we can cut through that, above that, with no problem, that'll be really ideal. This is NVDA. This is also doing really well this week. It bounced up really strong from the bottom here, as you can see, and climbed back above the 10-day, 21-day, even the red line. And then Wednesday, we continue to go higher. Thursday, we barely dropped a little bit here. And then Friday, we went to new recent high again. So this is coming back like a round straight cut base, very strong. We did have ARM Holdings report this week. The reaction was a little bit negative, but it did bounce back. So from that it was from last week. So it did bounce back, and it's slowly climbing back now. But Friday it did fall back to the short-term moving average again. So this is again getting very challenging. Definitely lagging the ETF because the ETF is closer to the red line than this stock is. Here's AMD. It did report this week. Again, it wasn't good. It wasn't good reaction here as it went back down below the 1021 day, and it just got stuck there from Wednesday to Friday despite the market moving up. Here's Taiwan Semiconductor, also trading very tightly, but again, not making much of a bigger move. Unfortunately, you can see even the relative trend line has not moved at all. So even though the market has been moving higher, this one hasn't really moved up that much. Here's Broadcom. This one is bouncing back much better. It's coming back on the right side of the base as well. Not as strong as NVIDIA, but it still looks pretty good. Next, we have Intel here, also bouncing back from the lows, but this week it hasn't made that much of a move, except yeah, Monday, Tuesday it did well. Right now we're still stuck near the 21-day pink line here. So overall, the chips did bounce back on Monday and Tuesday, but Wednesday to Friday it didn't really move that much. Here's the IGV, which is the iShares Software Sector ETF. This one was below the moving averages, and then this week we gap up, right? And then from there we're able to close for the week at the top, up even stronger than the semiconductor, over 8%. Here's on the daily chart, we see Monday, Tuesday, both days gap up, and basically right there it went back above all the short-term moving average. Wednesday we make a new intraday high, but it did reverse by the end of the day. Thursday we gap down and test the low here, which is near the green line. It didn't quite touch it, but we came close to it, and then we rebound off that, close strong on that day. And then on Friday we gap up here and have a new closing high. So yeah, software is a little bit on fire right now. So something to watch for. Here's Palantir making a huge move on earnings on Tuesday. It was up 29%. And then it tries to break out the next day, but it fell, came back down 2 days in a row to near the black line, which is the 200-day moving average. And then from there, on Friday, we were able to gap up and run really strong, up 10% by end of day. So we are officially breaking out right now. So that's a good showing. So and now we go back to Microsoft a week ago, which also showed spectacular response there from the earnings. And look at this chart. Since it gap up, it has not come back down and make a new low yet. That is incredible. It just continued to rise. And here's the green line, which is the 10-day. And you do see the gap is getting a little bit wider. So we may be challenged at some point as it might pull back. But so far, it just proven itself that it wants to be a leader. It wants to continue to run after the earnings result. So this is Amazon. Amazon did a similar thing where it gap out on the earnings, went even breakout here, and then it pulled back this week for 3 days in a row. And then on Friday, we tried to come up, but it just doesn't have the power and close back near the low of the day's range, which is not a good sign. It is still above the 10-day quite a bit, so perhaps they want to come down further and test that. Meta didn't do well after the earnings result from last week, and this week it did bounce back here. After that, it just kind of hold near the 10-21 day. So again, not showing too much strength after that initial gap. Here's Google. Actually, Google running out of steam here on Wednesday. It started to fall back down after climbing significantly the last 3 days here. So it's still near the 10-21 day, but it's not a very good showing. You can see the relative strength is starting to come down to quite a bit. So here's Apple. After the earnings drop there, it never really recovered too much. Even this week, most stocks recovered, but this one really didn't recover much. It's still near the red line, still below the green and pink line there. So it doesn't look that good right now, right? Like this is what we consider a L-shaped pattern. It dropped really hard, and then it tried to come back, but it really doesn't. So it looked more like L, than a V, right? Here's Tesla. It also bounced back. Now it's above the 10-day, so that is a good sign. On Friday, it finally came back above 10-day. So we'll see if it can hold. It didn't close at the top of the range though, so that's one caveat there. So here's SpaceX. This one actually bounced back 2 days strong this week. So on Tuesday it bounced back very strong, but it then came back down on Wednesday and Thursday. And then Friday it made another big move here, up 15%. And now it's above 10 and 21 day line. Perhaps this might start to build the right side of the base, possible. Although this is a very deep base, it's over 40% drop from the top. Here's Netflix, also slowly climbing back since the earnings result dropped a few weeks ago. So that is nice progress there. It is still below the red line, but it is getting very close to it. And also been, like I said, trading tight around the 1021 day. That's usually a good sign. So we'll see if this can continue as the climb above this red line here. Thank you all for watching. Lots of earnings coming out. So in my next video, we look at the growth stocks list that I follow. You know, how many percent of those stocks are in uptrend. You will see when you follow. And we're gonna go through like all the stocks that might be potential leadership if this rally continue. Thank you all for watching. Have a very good day. Please like and subscribe. Thank you for your support.